Thank you, James. Appreciate it. All right, so guys, this week, pretty quiet up to now. Monday, Tuesday, this is GMT +2. The big one, though, is Wednesday and Thursday, where you see 2:30 my time, CPI, so that's inflation news from the United States, consumer inflation, and the PPI, the production inflation. So this is the big news of the week. And looking at the charts this week, my theory or my interpretation is that the markets are waiting for these figures. This could have a massive consequence or knock-on effect to the market. So theoretically, what we could see is inflation numbers coming out less than expected. What this means is that future rate hikes, so future interest rate hikes, would not be as aggressive or as high as they have been, or they still should start slowing down. That, of course, means a weaker dollar in the future. Now, as always, I always remind my students, this does not mean you go into the charts and look for trade setups immediately. This should start forming your picture. It should start changing or enforcing the fundamental picture that you're starting to build. So be careful with these news events this week, guys. If you are looking to enter a trade just before this, I would strongly advise against it. Rather wait for after these news events and try and be flat. So do not have a trade on right before any of these two. So manage your trades accordingly. You need to judge them trade by trade. So if you're in profit already, consider taking profit off, moving your stop loss to break even, because anything unexpected from these figures this week, inflation, the underlying theme all around the world, and you could get whipped out really easy. So watch out for those two. Friday, we should not be trading. We've got English or British GDP news. So this could also be important. Shouldn't be because it's Friday, but it could have a knock-on effect to next week. So just again, guys, this inflation news from the States on Wednesday and Thursday, really, really important. Be really careful around these. All right, let's have a look at some of the other charts. So again, a little bit of a limbo situation this week. So this one, these are just the kind of in general what's been happening in the last few weeks. This is a weekly chart, S&P 500. So the biggest companies in the United States. And you see we had a breakdown, so really bearish, risk-off environment, pulled right back up. It's currently at an area of previous support and resistance, a big area. It's around 41.50. So expect it to start struggling there. If it breaks higher, you could expect a little bit of a higher move. If it starts struggling along this level, the scenario that I'm expecting is a far bigger pullback down. So this is risk-off situation. Not good for S&P. All right, let's look at the dollar index. We thought it might struggle at this level. It's pulled back a little bit. The next area of support and resistance I'm looking at is 102.82. So if we see this moving down to retest this area of support and resistance, even be a little bit lower, 102.12, you could expect the dollar pullbacks as we've been speaking about. But very much still very bullish, guys. This, just because we have a pullback on the dollar, it does not make the charts bearish necessarily. So still big move, breaks these structural points, forming higher highs. Expect dollar strength, even if it's not immediate, guys. Right, looking at the fear index, the uncertainty index, of course, inversely correlated to the riskier assets. So if this is moving up, people are more uncertain, which would correspond to a lower S&P. So lower S&P, higher VIX. So this is pulling back as well. I've got a channel line. You can analyze this just like you would a normal M2 setup. So pullback, still bullish. Does not mean it becomes bearish all of a sudden. And this, of course, this move down corresponds to inversely correlated this move up. So it doesn't change the overall bias just because you get a pullback, but you can see there this can help you with additional clue or confluence on potential technical setups. Looking at gold, this is a weekly. touching the big area of 1680, 1678, so anywhere around there. If we zoom back, found a lot of support at this area. I'm expecting stronger gold, and if it holds up above this level, if it does break below, we can expect a move back down. So just zooming out, area I would look at, if I just do this, 1450, if it does break lower. On the upside, I'd be looking at 2080, 2076, this nice double top that's formed there. If it breaks higher, expect a bigger move up, in my opinion. Oil, still very bullish. Again, just because we had a big pullback does not mean it changes the overall bias. If it does break below this trend line, let me just turn on my indicators. If it does break below this, it could change my bias, but for right at this moment, still very much bullish and expecting a higher oil price. Big areas of support and resistance. This is a weekly. 79.14, so anywhere around this area, 74.80. Could find support and resistance. It's still very much bullish. All right, you're looking at two big crypto charts we usually look at. Bitcoin, again, you should start seeing this inversely correlated, this little move up. Again, this is a weekly, so this is quite a little bit of a move. Pull back up, and then the uncertainty or VIX index pulls back, and this pulls up, and vice versa. So does not make this bullish by any stretch of the imagination. You could even have a trend line running there. So expect it to potentially struggle at this 200 and this channel line. If it breaks higher, we could see a bit of a move up. But personally, I think we might get a bigger move down. So finding support at 25.80, holding above this. If it breaks below, expect a deeper move. It can break higher, and out of this channel line, I think we can expect a bigger move up. ETH, very, very similar. You can see if she hold the instrument close, we wouldn't really know which one is which. 200 a little bit different. This again is a weekly. Again, found support at this 1420 level. Again, if it can hold above this 200, break out of this channel, start testing this area, we could have a bigger move up. Again, if it breaks below, again, below this 200, expect a deeper move back down. 880 looks like the next area of support and resistance. Just find this horizontal line. 730, 740, anywhere around this area where we found where it bounced off recently. Could find support there, but very much still bearish overall. All right, looking at the M2 setups. All right, I might look at a few more or less than Mark. I didn't go through all his analysis. I went through my analysis. So if there's anything else you want me to look at, just pop me a message in the chat. We're going to start with the majors. Again, guys, I would really consider waiting for the inflation news to come out. Areas I'm looking at 0.3500 for a short. Got a channel line. I've got 55. I prefer to look at this on the smaller time frames, but that is an interesting idea. Higher up, far away though, 1.0830. So 255, previous area of support and resistance. My personal opinion and what I think is going to happen, it might retest parity, so 1-to-1, but nowhere for the stop where it currently is, and also a little bit uncertain. USD Swissy bounced off this level last week. I didn't take this. I was too nervous. Same idea, 94,800. So playing this as a range. So up, down, down, up. The breaks lower. You could look to short potentially if you have all these EMAs as reasons for the stop. I think it might get stuck in these EMAs and chop along there, guys. Swissy, of course, you could look at the stronger gold price, which means stronger Swissy for correlation and for additional clues, but versus the dollar makes it a little bit tricky. So rather, I would look for crosses with the Swissy. So even 93,800, you can see as big area of previous support and resistance. So I think it might chop in there, guys, but 94,800 for a long at this stage, still technically sound. Pound USD, it's very, very similar to the Euro USD. Short at 21,555, got a channel line running from around February, middle February. So this is interesting. Again, guys, it's just very unclear at the moment with the dollar. Maybe let these stand over to next week, but 21,500 again, technically it does look sound. Higher up 1.28, but it is miles away. Aussie USD, 0.700, so round psychological number is huge for this pair. Big area of previous support and resistance. We can zoom out, you can see all the way back, multi-year level of support and resistance. I don't like this now, it's chopping up and down on this 55, so which way do you want to take it? Overall bias is bearish, but it's easily breaking this 55. I would wait for 71,500 to potentially short, or a way clearer break below, pull back, and then to short it again from this 0.700. You can see where you have a reason for the stop of 55, breaks above it, breaks below it, breaks above it, breaks below it. So you with a stop, there's already 50, 60, 70, 80 pips, you would get whipped out every single time unless you have a really big stop, which affects your risk reward. So careful with this one as well, guys. New Zealand USD, very, very similar. Again, 55.63 whole round psychological number is a huge area. If we look to the left, it's consolidation at this level, consolidation, support and resistance. There was a big break, and when it did break this level, it moves high up, which should give you a clue that it's a big level. Again, recently, consolidation, consolidation. It chops along this level though. And if I just get back to currently, sorry guys, you can see again, chopping up and down on this 55 at this stage. Not for me, maybe on the shorter time frame, you could look for potential shorts. I'd rather wait for 65, 600. It is quite a distance away to 300, 260, 300 pips, but by far the higher probability trade, guys. Just don't know what's going to happen with this dollar. Good inflation news or bad inflation news, depending how you look at it. Easy move up, easy move down. USD CAD, so this was the area we were looking at recently. It's around about the 28,400, 28,300 area. It is, again, it looks like it's getting stuck in these EMAs. This, for me, again, is a sign that markets are unsure which way they want to go. Is it a stronger dollar? Is it a weaker dollar? So expect this kind of chop. Maybe if you're lucky, a little bit of a bump up before the news. Keep an eye on that one. Areas I'm looking at 27 to justice 27,500, or again more, but I'd prefer 25,600 right back down at this big 200. So waiting for deeper pullbacks to take it higher. Again, still very much a bullish dollar. Higher highs, higher lows, very bullish. USD yen. So we had some yen strength in the previous weeks, and then what happened? We had good US job news last week, so that threw things off a little bit. The way I'm looking at this technically is I have a channel line, break out of the channel line, pull back to retest where it broke out, which price likes to do. So I'm bearish on this one at this stage. You can see this one breaking these structural points. The problem is now the 55 is below it, so no reason for the stop at this stage. Too unclear. I am leaving this alone. Areas you can start looking at 125.500. You've got a 200. It is quite a distance away. Again, way back down 113,800 miles away. But these are the kind of areas that to me make a lot more sense. Yeah, Ash is right. You're saying the Japanese index is good to look at yen strength. I did look at that last time. I can maybe go back to that. I do see yen strength coming back into the market. The problem is the mixed news on the dollar, which is shaking things up. So typically you would see the yen inversely correlated to the S&P. So a tricky one at this stage. I'd rather wait for a clearer signal on the prices. All right, looking at your crosses, euro pound, 84,800 for a potential short, multiple reasons for the stop. You've got a bearish bias now, breaking, making lower lows, lower highs. So this is where you would look at 84,800. If it does break higher, look at 8,600. So back into this range where we used to, what we played a few weeks back, up, down, Euro CAD area I'd look at 1.37500 on the smaller time frames, maybe 33,500, 33. I'm looking at the support and resistance, 33,800, 55 now, not that close. It's just too unclear for me, this guys. I'd wait for the prime A grade area, 1.37500 to short back down from there. If it breaks higher, this is miles away, but 1.45, 1.46 area. So these kind of prime A grade areas, far more certain than these areas down here. Euro Aussie, it looks, a lot of these crosses look really similar, guys. This is chopping along. So this, typically when you see this, like I was explaining with the dollar setups, when you see this kind of move, this means the market is choppy. It's trying to make up its mind. It typically would go into this typical kind of range. So up and down, up and down, up and down, not big enough to trade as a range and very uncertain. And then when we do get a breakout out of these tight ranges, it's typically violent or quite quick. Uncertain which way it's going to break though, guys. Again, not sure. Stronger dollar, weaker euro, stronger euro. So 1.51700, 55, 200, far better area for me, more certain. Or if it does break higher than that, 1.55800. So again, guys, typically when you see this, big wicks, so people are selling, people are buying, people are selling, people are buying, uncertainty. Aussie CAD, I'd look to short at 0.91200, multiple reasons for the stop, big previous area of support and resistance, far more certain, again, very similar to the others. If it does break higher, 93, 100, 93 whole number, this area over there, big area of previous support and resistance, I'd look to short from there. So from there, bias is still too short. I don't, again, guys, just look at this, up, down, up, down, up, down. So even if you were shorting from there, that would probably take you out. If you were trying to long from there, that would take you out. It's too choppy, guys. Euro New Zealand, 1.64500, 255, big area of previous support and resistance. If you look to the left, chop along there, nice big area. That makes a lot more sense. If it does break higher, 67,900, got the big monthly 200. That could be interesting. And if it goes even higher than that, 1.73500. This is miles away, but it is a strong area. Pound Aussie, 1.79200, multiple reasons for the stop again. Again, I'd be very cautious. I know Mark was looking at this level, 1.74900, 1.75 actually. So along this, could be interesting. I just don't like it now this week, guys. Right there, so you're waiting for a pullback to go short. I prefer these higher A-grade areas, guys. Aussie New Zealand, what I'm looking for is a counter from 1.12300. I've shown this a few times, but it's worth showing again. Big area of previous support resistance. I wouldn't take it immediately. I'd look for close below there. You can see this, it does like to spike above it. Longing from where it currently is, as on a 4 hour, you've got the 55 area of support and resistance. Could be interesting. So you're waiting for it to come down to take it up there. Look at that on the smaller time frame, guys. So that's 1.10200 area. And then pound New Zealand, I think, is the last one I'm going to look at, guys. This again, another counter trend. So you can see it's found support at this level multiple times, tried to break through, came back, tried to break through, came back. So this 1.9250, 1.900-ish, anywhere around there. You're looking forward to retest and then taking it back up. So this is a counter trend trade. Manage your risk accordingly. if for whatever reason this price breaks higher, I'd look for it to pull back and then take it from this area with multiple EMAs. All the big EMAs, all confluent pulled in together. That could be an interesting idea. I don't know if that's happened pretty soon, but again, counter trend 1.9250, and then you could look to potentially short from there as well. 55 in the way. If it does break higher out of this, if I look at this, looks like a one big massive range. If it does break out of this range, look to take it higher. Yeah, euro yen, I'm not going to look at 135,500. Actually, look at this 135,500 to long. So you're waiting for pullback to long. Potential short from where it is now. Greatest, guys, but you do have a 55. You have a bias of short, lower lows, lower highs, potentially. But again, guys, be careful with the yen. It's again uncertain. Could go either way. Could really strengthen or weaken further. So euro yen long from 135,500, short from the current position of 138,500. But I wouldn't be greedy with this, and I'd also look at this on the smaller time frames. Right, guys, whole bunch of setups. Pretty scary in my opinion with the news. Not sure it's going to go. Sometimes better just to wait out the news and then climb back in. Any other setup you guys would like me to look at? If there's nothing else, I'm going to hand over to Ash and he can talk through the Earth and Sky for the week. Ash?
Hey, Thinus. Nice one. Okay. Yeah, this Zoom keeps changing the interface. And yeah, it's causing a mess for us. But I wanted to share with you a couple of things. So yeah, first one was, you might be aware, Bank of England warned the UK will fall into a recession later this year. So this was one of the reports from BBC. So I just got that one out just to let you know. So they are talking about UK going into recession and that the growth will be slumped later in the year because they have also raised the interest rates. And it's just talking about how it's going to affect people. And there's someone here, business guy, who's losing £25 on credit cards, and he's talking about his problems, about paying his loan back. And there's a little summary they were showing here. So what has the Bank of England announced? Inflation is sitting at 13.3%. It's expected to peak at during the end of the year. So interest rate raised to 1.75, which is at the moment. And then average annual bills expected to hit 3,500 in October. And they're expecting the UK economy to shrink for more than a year. I think it's said at least 5 quarters that they're going to see this to remain at. And yeah, that's what that was there. And then today, this morning, I did not see it in the calendar, but there was a speech by Ramsden. I think he's a member of the Bank of England. So he was saying that we might be in a situation where we might be cutting rates and selling assets at the same time. So he was quite dovish in his speech, and he's talking about trying to cut rates. But at the same time, I don't think they might do that straight away, but they are going to be quite dovish in the future to try and get the economy back up. So that's a bit of that. As time has already went, there's not much news going on, but be aware of the yellow flag news and tomorrow's PPI for the USD. There's not much going on in the coming weeks. Next week is big for CAD, New Zealand, and pound CPI year on year. And there's a bit of Aussie employment change as well. and then go in the forum because James, he's made quite a lot of effort here to type us a bit of research on oil and inflation. So he's written a little article over here, which is quite interesting, and he's talking about how how they're using the oil as a distraction to tell us about inflation, but they're both like kind of separate. So yeah, there's a few videos, there's a speech over there, and then there was also the US passing a few bills to curb down the inflation. I think it was nearly $500 billion or something. But yeah, not sure how that's going to work out, because if you're printing more money, then that's surely going to affect inflation and raise it further. But yeah, quite interesting. Get involved in the forum, guys. There's people sharing out trades over here, and then I shared my trades here, which I'll go in a minute. But yeah, get involved. It's usually a quiet month because the traders are away. Usually August is like a ranging market. So yeah, I'll go through my setup. So I did take the CAD Swissy this morning. So that was based on the M2 setup, and that's why I've taken it, and my stop is around 54 pips. So I've put it below all these lows it has made over here. So the likelihood of it not to come down here is low. So that's why I've kept it away from all these spikes. And then I'm expecting to make at least around 80, 90 pips out of this, just because we might possibly be in a summer range and there's not a lot of volatility going on at the moment. So last week I did make around 70 pips or 80 pips out of this, like I shared. So yeah, basically we got to take what the market gives us at the moment. And then the other setup that I had was the euro pound. So you can see here I have fibbed and it's working out quite well here. I've put the stop just above the 61.8. At the moment, it's just hovering around here. I've kept my entry down here at 0.84649. So my stop is around there, 40 pips above all these EMAs. And I'm expecting to make at least around 110 pips. So will be a nice trade. But looking at the news we just had, and also the euro economy is not doing well. So this could go either way, but the technical setup is quite right over here. So let's see if it works out. And I will go into the earth and sky. So I think for the past month, we've been having the earth and sky setups have not really met the rules. But Pierre has been being flexible, and he's telling us to use the other things within his setup as a means to take the trades. So he's focusing at the moment on just areas of support and resistance. So like this weekly support and weekly resistance levels. So this could be a clue because we haven't had the earth and sky meeting the rules completely. So it could be an indicator that we might be going into a range market for the rest of this month, because usually the earth and sky works quite well when the market is ranging. But at the moment, it hasn't given us setups for the past few weeks, like maybe one or two we've had in the past month. But anyways, we can be quite flexible, and we always have the M2. So we got to use all these things that we have learned over here in Forex Mentor Pro and use that to our advantage and try to change our strategy when the market is ranging. So the pound New Zealand, we have a setup here, which looks quite interesting because we have the weekly pivot, these support and resistance lines here, and we can look to take the setup here around 55 pips. And then look to trade it back down to around nearly 200 pips to the weekly support. So that's quite a nice setup there. Then pound Aussie we have down here. So we had some yellow flag news on the Aussie this morning, which was the Westpac consumer sentiment, I believe. I mean, it was the confidence, I think. Let me just have a look here. So consumer sentiment came out negative, but there was no forecast here. So it is negative, but the confidence, NAB business confidence was slightly higher. So yeah, that still pushed the pound high against the Aussie. The Aussie was slightly dropping, but yeah, but this area here, 174,588, looks quite interesting. So around, you need a 50 pip stop for around 165 pip gain. Again, nice setup here. Weekly pivot, all the support and resistance line, EMA is pointing downwards. So we can use that as a confluence, 50 pips and then 166 pips gains. Pounds, we see this one for the risk reward wise looks quite good. So you only need around 33 pips and you can look to get around 70 pips over there. So a nice intraday trade, I will class it as, because you would want to be out of this one quite quickly. So you can put your stop just above there, 36 pips, and look to get your profit down here at the weekly support, where it is currently struggling at the moment. So we can see here it is below this level here. So I would rather wait for a bounce and let it come back up here. And we have the Euro Aussie. So at the moment, none of these actually made the rules. But then we have the Euro Aussie here as well that he has given us. So this one here came back up here and looks like it's struggling at the moment here. But I would wait for a little pullback down here. And you can look to get around 40 pip stop here and around 100 pip gain. So correlated, remember Euro Aussie and Pound Aussie are both correlated. So you can use both those pairs to kind of determine whether you want to take the trade or not. If they are going in different direction, that certainly means like a signal for you, like a red flag to maybe not get into the trade. But that's the setup, technical setup. So you're looking around a 40 pip stop here for a 100 pip gain almost. And the last one is the CAD Swissy, which I got into for a long, but Pierre has it for a short. So I would not really short this one right here, because if you see on the M2, it is in an area where you would normally long it. So that's where I have done that. And on the Earth and Sky, it's showing for a short. We do have the weekly pivot here. So if I had just filled that, I believe it is that. So it does not really look good for me. So I would rather long it. But yeah, he has it for a short on his pair according to his rules. But a long does look more promising than a short. And that's all I have for Earth and Sky.